y'all, welcome to my channel. I am Tiara Pace. In today's video, we're going to discuss how you can begin building your credit report as a first-time beginner. So if that's something you're interested in, or if you have a child or know someone who may need this knowledge, make sure you share this video with them, and let's go ahead and get right into it. To know is there are two major important things that has to be added to your credit reports in order for you to generate a credit score. Those are payment history and revolving credit. Payment history is going to be anything that makes up a monthly cycle each month, a billing cycle, right? So anything that's going to be like an auto loan, a mortgage, some type of loan that you have reporting each month to your credit reports. So you can also start off by getting a secured loan or an unsecured loan. A secured loan is going to be something as in self, something that everyone is familiar with, self. You have self and you also have credit strong. I'll go ahead and in the description, I'll link both of those if you're interested in checking them out. Or if you haven't watched my self video, make sure you go ahead and watch that where I give you guys my review on it. And I'll also be giving a review on credit strong on an upcoming video, so make sure you hit the bell so you'll be notified on that. A secured loan is going to be when you use your money up front in order for you to get a loan from your bank or from any other company that's going to report monthly to your credit reports. So an unsecured loan is going to be when a bank gives you money, they're going to give you a loan and you're going to pay that loan back monthly in order for you to be able to generate payment history onto your credit files. So the thing about getting an unsecured loan is if you have someone who is willing to co-sign for you, then you can go to your bank or a bank that you're familiar with and you can apply for an unsecured loan. It doesn't have to be a big amount. It can be something starting off as in $250 or $500. When I was beginning to build my credit, I started out by getting a secured loan from my bank for only $250. So that will generate you payment history. So don't think because you're a beginner you have to have a big payment amount, because you don't. Anything that's going to report as an installment loan monthly will give you payment history over time. So remember, payment history is needed because it's 35% of your credit score. Second thing you need to remember is revolving credit. Revolving credit is basically credit cards. You want to have some kind of revolving credit reporting onto your credit files because this is going to generate 30% of your credit file. So since you're a beginner, you want to make sure that you get an unsecured or a secured credit card as well. The way you can get a secured credit card is by starting out with companies as in Discover. Now, when I first started with my credit files, I started out using Discover, so I'll go ahead and link them in the description, as well as a different company called Credit Builder that's good for starting out as well. With Discover, you can choose different amounts that you would like to use in the beginning, and then as time goes by, within like the next 6 months, Discover will actually look at your payment history, and then they'll go ahead and change that over from a secured card to an unsecured card. And the good thing about Discover is if your payment history is on time and you do not have any late payments within the next 6 to 8 months, then they'll give you a higher amount than what you actually put down, and they will send you your money back through check. So if you begin with Discover and you put $200 down to begin with their secured program, within the next 6 to 8 months after you have began generating a credit score, they will send that money back to you and change you out into an unsecured card without you having to reapply for them. This would be totally free for you to switch over without having to actually pull any credit reports from you. They're going to go by what your payment history looks like with them for the next 6 to 8 months. And again, another company to get started with is going to be called Credit Card Builder. I also link them in the description as well, and to begin with them, it's only $200 a month. Now, as a beginner, you want to keep in mind that your utilization has to be under 30% each month per each card. It is not good to be close to 30%, and I always tell people to try to stay in the range of 5 to 10% monthly. So if you use your credit card, whatever your credit limit is, you want to make sure that you're staying below at least 5 to 10%. This will allow your utilization to stay low and it looks better onto your credit files. The thing about credit cards is the more utilization you have, meaning the higher your percentage is, if you go over 30% or if you're closer to 30% range monthly, it will begin to impact your credit score in a negative way. So if you go over 30%, it's going to make your credit decrease versus increase, as well as if you begin to get closer to the 30% range monthly, it's going to actually make your credit score shoot downward and keep you at a standstill. So in order for you to keep your credit limit high, you want to make sure that you're actually using this very responsibly. So as you're beginning to build your credit, make sure whatever you use, you're going to pay that off each month. Now, I'm not going to go into details about how to use credit cards on this video, but I will make a future video about that as well. So if you're interested in how to use credit cards, just make sure that you hit the notification bell so that you're able to be notified on that topic as well. So the first two things you want to make sure that you remember is 30% comes from your revolving credit, which are your credit cards. 35% comes from your payment history. So then you need to have a mix of credit, which is going to be 15% of your credit. And also 10% is going to be by the length of your credit. And then the other 10% is going to be by your inquiries. So your inquiries is going to be what you apply for. Each time you apply for different things, they're going to give an inquiry on your credit if they pull your credit. So if you begin to use unsecured loans or if you begin for unsecured credit cards, then they're going to pull your credit and run your credit, which is going to give you inquiries on your credit. You want to remember that the less inquiries that you have on your credit report, the better you look to lenders. If you begin to try to build too much credit at once, meaning you're going to different banks and you're applying to different methods, or if you're trying to apply for different credit cards all at once, this is going to affect your credit score by 10%, because the more inquiries you have, the more it can actually ruin your credit. So as a beginner, you want to take it step by step and you don't want to do everything too fast. You want to start off by having a strategy and applying for those cards that's needed as you begin to build. Then you want to wait for 6 months to begin building more credit limits onto your credit file. You don't have to build everything at once. And just remember that this is a progress, so don't think that you have to rush into getting everything at once, because you do not, in order for you to begin building. Most important two things to remember is payment history and having at least one secured or unsecured credit card and keeping that utilization below 30% each month. Now, as you begin to build your payment history, you want to keep in mind that when building payment history, if you forget to pay a bill, it's not going to report onto your credit file until you are exactly 30 days or more late. So don't feel like if you forget to pay something that it's going to affect your credit score and that your credit history is just going to be ended then. That is not how it works. You have 30 days before it's going to affect you. So if you do tend to miss a payment and you forget to make a payment, just keep in mind that you have 30 days before your creditor reported to the actual credit bureau. That's when it's going to affect you. Another thing, as a beginner, you have to remember that you have a creditor and then you have the credit bureaus. Credit bureaus are TransUnion, Equifax, and Experian. Anything outside of that is going to be who you owe, meaning the creditor. You will have to pay your creditor depending on what your contracts say. You may have to pay them a late fee, meaning instead of you paying only $200 on your loan, you may have to pay $230 on your loan. Just giving it an example. So keep in mind, just because you miss your payment, that does not mean that it's going to report onto your credit file until you have actually gotten 30 days or more behind. When you begin to check your credit, you want to make sure that you're looking at this as well, because it'll show you 30 days, 60 days, 90 days, or 120 plus days behind if you do begin to get behind. But that's not your goal. If you're building your credit, you want to make sure that you're keeping up what days you have to pay for every installment loan or every credit card that you begin to get. because this is going to help you have a better payment history, as well as save you money from having to pay more money in interest or in late fees towards your bill with your creditor. So keep that in mind as well. Before you begin trying to apply for different things, you want to make sure that you have all of this in order, and you want to make sure that the length of your credit also has a good standing on its own, and that your credit file has all of these different mixes in it before you begin to apply. Just because you have a score that's generated at 700 does not mean that you will get approved if you're someone who's just now beginning to build your credit, if you do not have that history that is needed to strengthen your credit reports as well. So I hope this video helps you guys, and make sure you give me a like on this video if it helped you. And if you have children, make sure that you are sending this to them, because we need to begin teaching our kids and helping them to implement these strategies as they begin to become adults as well. So although we're learning, we need to also be passing the knowledge back down to our children and their children and their children's children. So again, thank you guys for watching this video. I hope it helps you guys, and I'll see y'all next time.